Da-da-da. Hey, good morning, Howard New. Comment allez-vous? Today is a Monday, December 3rd, 2018. This is your daily Forex trading strategy session. Thank you very much for attending here at the Forex.Today YouTube channel. If you'd be so kind, would you please click on subscribe and like, and please leave a comment. Let me know what currency pairs or topics you'd like me to cover. If not today, then maybe tomorrow. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So anyways, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client of Traders Way. If you are new to these webinars, if you're enjoying these webinars, if you're learning from these webinars, if you're gaining confidence from these webinars, if you just happen to like these webinars, would you please pay it back by visiting TradersWay.com and opening up a free demo account? And maybe one day, after you've tested our execution speed and looked at our competitive spreads, maybe even talked to our world-class customer service, maybe one day you'll choose Traders Way as the prime broker to your successful Forex trading business. Pretty simple. So visit TradersWay.com, all right? Come on. Don't be rude. All right, so what's going on in the world? Well, we had that whole G20 thing, and what we talked about last week is if Xi and Trump could play nice together, dollars should weaken, yen should weaken. And if they can't play nice, then dollar would strengthen and yen would strengthen. So looks like our crystal ball has worked. Right on. We'll see how that lasts. Maybe not for very long, but nonetheless, it's happened. Yes, I hope you had a nice weekend as well. My weekend was incredibly busy. And I got an incredibly busy week coming up. Buongiorno. All right, so anyways, that's all come to pass. Like I said, we'll see what happens. But that's good for global macroeconomics. Typically, that's also good for oil. Now, oil is way up, and you'll see that today, and that has to do with Russia and Saudi Arabia. They want oil prices to go up, so guess what? Oil prices are going to go up. But we talked about this 2 weeks ago. I said that the OPEC meeting is coming up. Well, that's this week. So now we got the OPEC meeting coming up. So hopefully they don't mix up their messages and say things that would weaken oil. But right now, we've been looking for a technical bottom. We priced it out at specifically $50.09 is what we've been trying to set up technically. And well, we might have gotten what we were looking for. Ian says, hey, great prediction on USD Mexican peso, 170 pip gap and still dropping. Hey, compliments of the firm. Ian, have you opened an account at Traders Way yet? You got to pay it back, brother. Oh, yeah, where's the beard? Yeah. What do you think? Raul, no. So wherever you're coming from, that is just simply wrong. The spreads are not high. Thanks. All right. So anyways, everything's back to normal. Let's flip over to the charts and get on with it. Cool. Yeah, well, good. Thank you, Ian. Appreciate that. All right, let's take a look at this. This is a trade plan from Friday. Actually, it took like a week, didn't it? Took a while. This is an Aussie yen chart. I cleared out a lot of the clutter for you guys. But pretty nice, right? Hey, Emilio. Sir Emilio. Pretty nice, right? Now, you notice the gap? Very nice, right? Again, this is going to benefit, or it's benefiting from positive global macroeconomics. We talked about Xi and Trump being the leaders of these two drug cartels. So when they get together and say nice things, then that's really good for global macroeconomics. Now what about? Well, look, Emilio, as long as you're back with the family, that's all that matters, man. Okay, wait till you start your performance coaching, Emilio. Gonna blow your mind. Yeah, Chuck, like if someone says something factual, then maybe I can explain it and I'll say, well, it's it's a type of firm that it has to do some blah 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 blah, right? But someone that comes in and says that is just it's nonsense. So, right? Strange, right? Yeah. So, anyways, guys, going back to this, what did Trump agree to do? Trump agreed not to raise more tariffs, which he had threatened to do. No, Joe, I'd like to try to do it today. Okay, it's on my plate. I might be tomorrow because right now I create a list of all the things I can't get to. So it's a tough world. But anyways, what did Trump do? He said, all right, I'm not going to raise more tariffs for a while anyways on China. And what did China say? China said they're going to buy more farm products. Now, think about it. Who voted for Trump? Farmers. Right? So anyways, that's good for Trump. So everybody's happy. Good deal, right? But that's global macroeconomics. That's good. Business hopefully improves and all that kind of stuff. And that's going to benefit Australia because if Chinese production and manufacturing is going to pick up, they're going to need natural resources. And not all things like, like for example, the United States, I think it's like 90%. I might be wrong on this, but like 90% of American soybeans go to China. And probably 90% of Brazilian soybeans go to China. But anyways, besides that, Australia provides iron ore and coal, which can be used to make steel, or clean coal, which can be used to produce electricity, and all that would be coming from a Chinese economy that would be improving, and that's what global macroeconomics is about. Okay, so you can see it's instant benefit. But going back to last week, we talked about the likelihood of this happening, and we measured in two different ways where support would be. You notice there's no pivot points here. It's just price action. It's just Fibonacci. It's simply playing a higher high, higher low off of a bottom. Okay? And it worked out. Yeah, but like John says, Aussie gapped up 80 basis points. But the point that I'm getting to is it's the fact that it happened is less important to me than us talking about it a week ago, technically and fundamentally. The fact that it happens now is almost irrelevant. You're like, yeah. So so what we talked about on Friday, being up in this area, is if Xi and Trump didn't work well together, if Trump stormed out of the G20 meeting, we'd be down here by now. But they didn't. They cut a deal. and it gapped up. But you shouldn't be trading the gap now, right? That's so last week is what I'm trying to get you guys to. Right? Nor should it be a surprise. It was either, a gap up or a gap down kind of thing. But anyways, that's all really good for Australia. Also, if you guys want to really kind of get advanced in your trading, we were talking about sort of the billions scene where there's a tsunami somewhere, and he because of it, he instantly could think of 9 trades. Well, so what in this case, how do you make money on this? Well, if there's going to be an increased demand in farming exports to China, maybe soybeans rally today. But that's really amateur, though. Of course they would rally. I don't know anything about soybean. I've stood on the trading floor of soybean meal in the soybean meal futures trading pit. Stood there. My ghost is somewhere in that room. But what about this? Farmers are harvesting now. They're not planting. So if soybean prices skyrocket because of this new potential deal, what's going to happen this spring? Oh, snap. Are we talking 7 or 8 months in advance? What's going to happen? Right, so that's what I'm saying. John says soybeans rallied $20. Yeah, but now what? Well, here's my thought process. Farmers in the spring are going to look at high soybean prices, and they're going to plant soybeans. That's in the spring, but that's still 6 months. At that point when they plant, it's still 6 months before they can harvest. So we're still a long ways from that. So soybeans 1 year from now will be lower priced than they are now, but we don't know how high they're going to go. Maybe this is the highest they go, or maybe they go higher. But at some point, 1 year from now, we'll have, let's say, 30% more soybeans, and that would be an increase of supply, and then prices would come back down. But we're a long ways from that. In the spring, if someone decides to plant soybeans because of high soybean prices because of what Trump did last night, then they're going to have to give up. See, it's a substitution effect. They're going to have to not plant something else. So now if you can figure out what farmers are going to plant in the spring, no, not plant in the spring and instead substitute for soybeans, then you're going to then have this beautiful situation where 1 year from now, you might be selling soybean futures, but you might be buying, I don't know, let's say they plant soybeans instead of corn, or wheat instead of soybean, right? Or they're planting soybeans instead of wheat, or soybeans instead of corn, or soybeans instead of barley, and try to figure that out. And so now you'll have a situation where a year from now, one market will be rallying because of a shortage, and soybeans will be falling because of an oversupply. Then you can take it further. Is there a difference in the farming techniques between if they decide to plant soybeans versus whatever they gave up? So many years ago, when corn planting went up, and remember the government tracks all of this. So there's a farm report that comes out and it says, oh, farmers have planted a lot more corn this year than usual. So then you could say, well, corn needs something like 50% the amount of fertilizer. So then you could buy fertilizer companies, and the stock of those fertilizer companies will likely appreciate. And then if they have to buy new equipment, like if they have to retrofit their combine, because normally they plant wheat, but now they have to plant corn, so now they need the corn attachments, then you can buy John Deere, for example, futures or stock, because farmers are going to have to borrow money from the bank and go and buy the new attachments so that they can harvest the corn instead of harvest the wheat like they normally. All this stuff can happen. Boom, 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 boom. So You can go back and plan these things out if that's what you're interested in doing. If because again, a lot of people say, "Wait, do you watch Billions? Do you watch Billions?" Well, I've only seen it 3 times on 3 different airplanes in 3 different seasons too, which is actually funny. But if you want to be Axelrod and do this, and this, and it sounds all smart, you need to think about cause and effect, and not just one domino. It's like game theory. You do a branch. A farmer has to decide soybeans or wheat. And if soybeans, right, then what will happen? And then what will happen to that? You start planning that out. Okay? And that's where you get that. And also, you could probably read like Ray Dalio's book. I haven't read it, but, that Ray Dalio is known for being that guy. All right, so on with it, right? So with oil going up now, so let's go with oil. We've been watching this area right in here, remember? And we spent a whole week, 1, 2, 3, 4, 5 touches of our 150.09 price. Thank you, Sound Zone. Okay. And now what? So are you going to follow this up? And this is the price that we've been waiting for, this one here, specifically this. So our plan, like if we were a bull, remember, like way up here somewhere, we said stop being a bull. But we never stopped looking for where support would be, right? Now this is the monthly M2, and we've been talking about this for the whole course of this week because of our pivots. Okay. So now that we have what we were looking for, in this case, it's a quad bottom, a 4 bottom, a 4B, and our price was 150.09. Remember, we're not playing like, you can just call it 150, but our technical analysis says 150.09 and a half. So I guess you can go 50.10 if you want. But we got that quad bottom, and now we're up here. So now you move to the next level of technical analysis, and you start doing things like this, right? Is that what you want to do? Have you become a bull? Now remember, what else is going on? Well, Saudi Arabia and Russia announced over the weekend that they are going to work together to prop up prices. And now, this week, we also have an OPEC meeting. And what do you think they're going to talk about? Yeah. So you have to make a decision. Okay? This is not technical analysis now. So Sabucio says, hey, I'm going to wait until I get a blah, 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 blah. Well, that's a technical, that comment speaks to technical analysis, right? What do you mean? Well, wait to confirm. Wait and confirm what? This has already happened, right? This is a fundamental play where this has already happened. And the purpose of that agreement is to make oil prices go up. Or at least, at the very least, keep prices from falling. Okay? And now they're going to sort of get other guys on board, most likely, is what's going to happen. So, which is, again, to stabilize prices. So this action by a cartel of producers is to stop this downward move that happened in October and November. Okay? So now you have to decide based on this information, what are you going to do? Okay. No, why would it seem strange to you? Now, first of all, remember, part of the reason it's bouncing around here is because we had the G20 meeting coming up and it was going to be super important. So the last half of the week, nothing really happened, and that's why it's, I would just call it a bottom. I wouldn't make a big deal of a 4 bottom, and nor I don't see why a 4 bottom, a quad bottom would be unusual either. But so anyways, you can go through, pick your lines here, prices that you think might be important in the future. Okay, see how you want to play it. You might want to switch over and are you a day trader? Like if you're a day trader, the interesting thing of this is like you might have been a bear a long time, and I don't know if you traded on the way down. But maybe you start day trading this up. See how it's been moving sideways for a long time? I'm better sleeping on my own. Where are you going to go weekly? Guess where's just the weekly one? Yeah. Okay. Now, what is the pattern? This is where bulls buy. This is where bulls take profit. Isn't that nice? Straight out of the book. Do you think, Alex says, do you think the weekly central will be a front run? Well, I don't think that way. Don't think. What's better is to just simply support and resistance. I don't care about the pivot. Okay, that's going to be the first buy zone right there. Okay, and then these are weekly pivots, right? So let me ask you this. Well, let me just say it this way then. These pivots here are drawn by what happened during this period. And because nothing happened in this period, these pivots here are probably not that accurate. So in those situations, you're much more likely to have an extreme week where you're outside the logical pivots. But even that being said, it's nice that they still work out M2 to M4, just textbook wise, right? Oh, sorry. I'll just put it back to this way. I was just showing you a different template. It's the same thing, guys. I'm changing templates. I'm not changing the asset. These are templates. Okay, there it is. Okay, and also, by the way, guys, when I'm going over technical analysis, it doesn't matter what this is. I'm not telling you to get into a specific trade at a specific price with a specific target. That's just, okay, that's me telling you what to do. I'm teaching you technical analysis, so this could be like Aussie Kiwi, and the analysis would still be the same. I'm backing this up by saying this is not, this move was engineered by people that control the market. Okay, that's the first comment I made. That would be relevant to the fact that this is oil. Okay, but beyond that, now what we're talking about is, where's the support and resistance, right? So I'd look at this low and this the high and drag them there, and I say, well, that's not your usual pivot. Someone else asked me, will it retrace down here for a buy? And I said, well, way before I'm talking about that, I'm going to talk about this. And that would put us outside the normal weekly move, but this week is probably that kind of week because last week there was a tight range. So now we're going to blow out through the pivots. So am I feeling better about USD CAD? That's the next step. Good thinking. So if oil goes up, then who benefits, for example? Who will benefit from that? And that's where you want to start looking for this. Now, what did I say would happen if oil prices finally stabilized and started to rise? I said USD CAD would fall. Yeah. Now, to add to this now, today is the third day of the month, but the first trading day of the month. On the last trading day of the month, we were here. Is that relevant? That is the bear pivot. That is the bearish pivot. That's it. That's the one. Based on the rules of engagement, this is not a good price, this is not a good price, this is not a good price, this isn't a good price, that's not a good price, a little higher is not a good price. No. This price. Isn't that funny? Jean-Guy! Mr. Boucher! Monsieur Boucher! Yeah. Beautiful, right? So can you answer the basic question, where are we going? Yeah, you should be able to. Okay, you should be able to answer that question for this week and this month. Okay, and now if you want to be a cheeky monkey about it, okay, you would tell yourself it's changed directions. Okay, so once again, you have to make decisions. Do you believe oil is going to continue going up? If so, do you believe the Canadian dollar will still appreciate higher than the USD? And if the answer to that is yes, you've done 90% of your work now. I clean up good, real nice. Yeah, thank you. Hey, welcome to the family. Oh, thank you for subscribing. Ooh. Oh, sorry. So, if you believe these things are true, you believe oil is going to go up, therefore Canadian dollar is going to benefit. Great. Then what will your technical trade plans be? Remember, we're not analyzing to try to figure out what's going on. You've already figured out what's going on. You don't even need a chart for all of that. So now that you've made the decision, technical analysis simply tells you the right prices to buy, or in this case, sell, and the right prices to not sell. So, pop quiz. Let's do it this way. Is this a good place to sell? No. Now, how you came to that conclusion doesn't matter to me. Okay, well, if it rose into here, would you sell? And the answer would be yes. That would be a great place to sell. Okay. What if we did this and this, and then it rose back up to here? Could you sell it again? Yeah, you could. Typically, I don't. But in this week, you could, for the same reason I kind of talked on oil. This is not a technical play. You guys have to stop trading like it's a video game, right? If OPEC, and before that, Saudi Arabia and Russia, got together and said, oil prices are not going to fall anymore, that's it. And they could probably do it, right? Then we have reached, right, on Friday, and I guess even just before Friday, on Wednesday, but we have reached the bottom. In this case, the bottom for CAD. So falling means rising for Canada, right? So from here on in, this, you're a seller at resistance, but this new fundamental event, this addition of information to your analysis would tell you this week, because of the shock, this exogenous shock to the market, price is going to move farther than just a typical average boring market. You understand? So you could say under those circumstances, yeah, you could sell it. Typically, you wouldn't sell it there. It'd be a bit aggressive. But you'll say, well, my fundamental analysis says in this situation, I could take another shot. Boom. And what happens is then next week's pivots are going to be large, and you're going to have a more conservative week. Okay? Now, is that going to work? I have no idea. I have no idea. I'm asking you to think about it, make decisions, and then go to your chart and simply implement. See, that's a strategy, right? Yeah, it's this week. Okay? Right? And if Libya says to them, screw you, we're not cutting back oil, then it doesn't matter, right? This is for them to get together. Saudi Arabia and Russia is just going to like push these guys around and say, sign the damn deal, right? So they're going to sign the deal, and OPEC's going to announce cuts, and right, a floor is a floor. If you believe all of that's true, like again, I've never been to an OPEC meeting. I don't think I've even been to Vienna. Man, I'd love to go to Vienna. Okay, so, but if these things are right, then what do you do? What we're talking about is strategy. Remember, strategic and tactical Forex trading is my book, my byline. I wrote, 11 years ago? It's not something I just invented, okay? If your strategy is correct, and that is where you make your money, that's what people are willing to pay you for. If all you do is just trade and you have no strategy, you're like the street sweeper of the financial capital markets, right? Someone with a strategy is predicting and really implementing future, right? So if you say OPEC is going to release a thing and it's already happened and the $50 a barrel was the low for the year and it's going to go up from here, then great, and then CAD's going to move and all that. That's all strategy. So if you're going to ride the CAD based on the oil market, then you say, well, based on that strategy, then technically I will implement the strategy by selling at resistance. Therefore, where is resistance? That's all your technical analysis is going to tell you. But that's great. That's the fun part now. The fun part is you're just like, are we at resistance now? You guys said no. Well, then that must be a terrible place to sell. Where is resistance? Well, the funny thing is it could be resistance in the future. But again, that's technical analysis. So I wouldn't sell at this price in these current market conditions, but I'd sell at this price in different market conditions. Okay, that's one scenario. But what I'd rather have is this. Great, well, I'd sell that on that scenario. So on and so forth. And this might last to the end of the year, maybe longer. Okay? That's where you want to go. That's where you want to be. That's the game you want to master. What's your strategy? And then you use technical analysis to carry out the strategy. And if I was like an oil trader, or energy complex trader, I would do things like read every press release that comes out of these things. I'd go to the OPEC meeting website and literally read their press releases, and I'd get to know the names of the players and the backgrounds and the geopolitics between the countries and the producers and OPEC versus IEA and all this stuff, right? Because IEA is going to then do their follow-up, and then Trump's going to do something else. I'd get right into it. In fact, the beautiful thing about being a trading business is you can fly yourself to Vienna, stay in a beautiful hotel, and write it all off in your taxes. Because you're an energy complex trader and you're doing your job. Nice. Okay. By the way, did you hear that there was a huge earthquake in Alaska? So I don't know if that's affected any of the oil there now. I think the earthquake was 1,000 miles south of where the oil's from, but it's always something to be, right? So I don't know if you got the message like, pa-ching, earthquake in Alaska. I don't know if you then started looking at things like, what do I do? What do I do? What do I do? Right? What do I do? Oil. Did it affect the oil? Where was the earthquake? Where was the oil? Okay? That's if you want to be like the Axelrod guy, which is fine. That's an alpha type strategy or fund, or really you need to have both, right? If you want to be that kind of person, you have to say, okay, great. What's in Alaska? Oh, oil. Great. Where's the oil? Where was the earthquake? Start looking at things. Yeah, but that is your job. So, Joe, what you could do is you can make $1 million trading the money or trading their horrific event, and then you can donate as much of that money back to them as you want. See, that's the nice thing about money. Money is good. I don't know where this world came or got to where they said, rich people are evil and money is the root of all evil, all this stuff. No, an a-hole with a lot of money is still an a-hole. An angel with a lot of money should still be an angel, right? So if you want to make a difference in the world, make a crap load of money trading Forex and then fix whatever problems you see are in the world. But poor people very often cannot fix anything because they're poor. It's not that they don't want to, or they just can't. They don't have the resources. So, right? So if you want to make the world a better place, start by making yourself very rich. And then you can start fixing things. Okay? So make $1 million on the earthquake event, and then donate the $1 million if you want. All right. So anyways, cause and effect. I hope you get into that. If that's the kind of stuff you like, I hope you get into it. Okay. So gold. Okay. So I said last week, if Trump and Xi played nice together, then dollar would weaken, yen would weaken, and Swiss franc would weaken. The opposite of of dollar weakening is gold rising. There it is. You're welcome. No gap. Smooth entry. Right? Smooth. Just gorgeous. Here's the weekly central. Here's the monthly central. This is the front run if you trade on Fridays. And off we go. And notice that we haven't hit the top of the market on this one. So it's been slow and steady. You can do that too, Michael. Money didn't make you that type of person, though, right? That's all I'm saying. Money is not the root of evil. All right. What did they say? There's no dignity in poverty. It was funny because that's a line from Wall Street, the movie Wall Street. Bud Fox says to his dad when you first meet his dad, they're at the bar just near the airport having a beer, and he said, "Dad, there's no dignity in poverty anymore." So somebody Googled it the last time I brought it up, and they're like, "It's in the Wolf of Wall Street." And you know you're old when people are quoting things that are actually quotes of other things that you know. You know, like, so for example, my kids went and saw The Grinch Who Stole Christmas. And I'm like, didn't they already do that? They're like, no, the first one was a creepy live person one with some guy in makeup. I'm like, yeah, that's the Jim Carrey one. That's not the original. But you're old when you know these things. You're like, no, the other one was from 1968. So, anyways. So gold went up. Why? Dollar went down. Easy peasy lemon squeezy. All right. And so last week, we said on Friday, which is here, we said USD Mexican peso was going to fall. And I made a video, 6 years ago, explaining why this would happen and why it would happen on Friday. Yeah, you're welcome. Yeah, you know what? Is euro Polish zloty? It's not PLN, isn't it? Isn't it PLZ or something? Is it PLN? Maybe that's a different one. PLN. Is that zloty? No, it's not Fed news, Ricardo. It might look like it, but it's not. PLN. That's not Polish zloty. I don't know. See, Alejandro? Yeah, okay, but you meant zloty, I think. Polish zloty. I actually, I said to people maybe a year or two ago, I said, look, if you're looking at your trading career, or you're trading as a career, you can trade other people's money, right? And that's where you can start your own fund and raise money and be a business manager as well as a trader, which is very difficult because you got to deal with the compliance stuff, but then you also have to raise the money. So you spend a lot of time building documents and doing sales presentations and doing business development things and going to meetings and networks and documenting things. And you're really running a business. And you'll find that the trading is significantly easier than running your Forex fund. The business side is much more difficult than the trading side. Because think about it. Typically, you get someone that starts a hedge fund and just hires a bunch of traders. What's the big deal? You just hire a bunch of traders. And then you go out and you deal with your billionaire clients and all the stuff that goes with that and compliance and all that kind of stuff, right? And you almost never get to touch a chart. You just sit there like, please, I want to look at a chart. No. Okay, so some people would rather trade, but they would rather be the trader. They'd rather work at a bank, for example. Well, if you get hired as a foreign exchange trader at a bank, they're not going to say, okay, you're going to trade euro dollar. And you're like, really? And then they break out laughing. No, you're not going anywhere near the euro dollar. And you're like, well, where am I going to start? You're going to be a portfolio manager for Eastern Europe. So you have the Polish zloty, the Hungarian franc, and what? Maybe that's it, right? And so I suggested a couple of years ago, you should include that in your trading if that's the path you want to be on. So in 5 years from now, you're going to work at a bank trading their money, which is nice, better than client money, right? Then you'd walk in and say, oh, I already know how to trade this, and I already know the central banks and the policies in play and all that kind of stuff, right? Or if you speak Spanish, I would highly recommend you do Latin America and get to know the Latin American countries, because then you could walk in a bank and say, yeah, I know everything going on politically and economically, right, for all of Latin America, and I know all the geopolitics and everything going on here, and I boil it all down to exchange rates. You got a job like, boom. Okay. Ricardo says, why would it happen on Friday? You need to watch the video that everyone else has watched. I recorded it 6 years ago, I think, just to answer that question in great detail. Because to answer that question very often takes me a half an hour. So I think I answered it in 12 minutes in the video. Does anyone have a link for our friend Ricardo? Ricardo Johansson. Pete, is that what you want to do? So anyways, guys, you're welcome. Well, like Peter, for example, like at MetaTraders, right? You trade one thing with a bias and that's it. You don't need to do fundamentals. You don't, right? Because you've been assigned that. So if you're like supposed to trade Aussie Hungarian franc, then and you're a buyer, then just buy it. And all you're doing is find support, find support, find support, find support, find support. Meanwhile, there's someone else on your team doing the opposite. And if you guys are really good at buying at support, or you're really good at buying at support, and the other person is really good at selling at resistance, and you both manage your risk properly, both of you are going to be making money. And in certain market conditions, one guy's going to be making more, but then those market conditions change 2, 3, 4 times a year. So then the other guy's making more, and at the end, you both made a crap load of money. And meanwhile, the institution you're working for makes a crap load of money, and all the clients you're representing make a crap load of money, and everybody's happy. And over time, I think you would add the fundamentals, but they'd be less required, right? You're welcome, Michael. Michael says, thanks for the pips, by the way. Aussie yen up after the G20. Yeah, it's just fun. That's just fundamental analysis. So we can go through and look at a few others and see the contrast and contrast these. Thank you guys for posting the link to the video. Ricardo Johansson, those are for you. Hey, if anyone's new to these webinars, please accept my invitation to subscribe to the channel so that when I start these streams, you'll get a nice little notification and it says, hey man, if you happen to be available, you're welcome to stop by the webinar. You click the button, it brings you right in. Super easy. So I invite you to become a member of our team. Yeah, so we also have to look at, that's why I'm looking at this, right, Joe? So let's go through it, see what's working, what ain't working, and what time frame is it working or not working, so on and so forth. Okay. Now this is different, right? That's a 5-minute chart. So what's going on here? Is it possible that the pound is just not a good currency? Right? Maybe there's something better to be putting the firm's money in, right? But CAD looks just fine. Now CAD says you should entertain taking a break. Okay. I look different, Ricardo? I haven't changed anything. You know what changes is the season. So I have a wall of windows looking over a lake over here and part of my forest. So like I'm looking this way and I can't see any neighbors. It's just all lake and there's an island in the lake and then it's just forest everywhere. It's really cool. But there's lots of natural light coming in here. And then right here above the camera, I have a light. It's actually built into my desk. It's really nice. The desk looks old. It's all mahogany or something. It's actually Art Deco. It looks old. It's very heavy, but it's got like USB ports and power points and everything in there. And then you got this big light behind me, right? So that's going to mess up the way the camera works as well, right? Or the way that the lighting takes effect. And then I have the lights above me. So it's just, there's a lot going on here, I think, for the camera. Yeah, John says that the pound is considered untradeable due to the current state of Brexit. Or you could just sell the heck out of it, John. Maybe it's just unbuyable. I think, when it all comes down to it, I think it's going to be bad for the pound. And then I think maybe, and this is just a guess, I have no analysis to back this up. I think maybe people are going to overreact and it won't be nearly as bad as everyone thinks. And so maybe it's unbuyable today, but maybe at some point in period in time after Brexit, I start buying pound. See, if you go back, what is it, 2018? Oh, sorry, there's my head. If you go back to, when was Brexit announced? Thank you, Emilio. When was it announced? 14? So anyways, just before the announcement, maybe 6 or 8 months before Brexit was announced, I was analyzing British, or I should say, the GDP levels for the United Kingdom. And I looked at it over the period in which the periods that are included in the GDP calculations. Okay? And at that point, we got to a point where only data included in the calculation of GDP for the UK was bad data that came from the post-2008 crisis. So the best data was okay. The worst data was bad, okay? Bad. Because it was all like 2007, 2008, 2009, 2010, 2011. Like, it was just 5 years, I think, of just horrible quarter after quarter after quarter results. But I knew coming up if you knew how GDP was calculated and the number of periods and all of that, I knew we were coming up to a GDP that was going to be surprisingly good. Just by the way it was calculated. You could figure that out. But also, that's sort of the quarterly GDP, but the annualized GDP, if you went all the way back and found out that the last data set in the calculation was horrific, like the worst numbers of the financial crisis. But in the new calculation, when they were going to add the surprisingly good new data, the worst piece of data falls off the data set. It just because because it's always moving forward, right? So I said, well, what do you think happens statistically now when you add a very good number and you drop a horrific number? Well, the differential between the good number and the horrific number creates this massive improvement, right? Statistically. And I said, nobody sees this coming, right? And when this hits, and we had the exact date and everything measured, or time, when this hits, the world's going to be surprised and the British pound's going to go crazy. And then right before that announcement came out, Brexit. And I'm like, whoops. So I had this brilliant plan. I was going to be the smartest guy in the room. And oh, dang it, Brexit. Okay. You were just a young trader. Hey, Alex. So anyways, that was pretty funny. So it's good to know the numbers, right? So that you can predict these things and you weren't going to react. But even then, who would have thought that the UK would shoot itself in the foot or head, or I don't know what Brexit is. But yeah, good luck with that. Right? Well, at least the English have fantastic weather, awesome food, and whatever. So yeah, good luck with that, England. But at the end of the day, I don't think it's going to be as bad as they say, and that's just a guess. I don't know why. So let Brexit happen and hope for the worst, because in that case, people really find out that the worst is bad, but not nearly as bad as they thought. And then if it's not that, then it's not so bad, and the world recovers. Okay. So anyways, yeah, interesting stuff, right? So what do you do? Like, you want to look at Euro, right? The way I kind of look at this, and we talked about this a couple of weeks ago, really, like when the dollar does weaken and the yen does weaken, what do you buy? What, Europe? Right? We're still not getting the numbers out of Europe that we want. Do you buy pound? You're like, pound with Brexit? You're like, so I believe I concluded that I'd like to see improving numbers out of Europe so that I could buy Aussie and CAD and Kiwi. And these are all commodity plays, right? So like you saw CAD yen, right? And you saw Aussie yen. We haven't looked at Kiwi yen. Okay. And this goes back to Friday's swing trading group meeting, actually. Oops, let's do it here. What I drew for the swing trading group is to imagine the future 21. Because we were here, right? So anyways. Because our goals here, okay? Trying to get this lined up here. Our goals were to buy a dip. We assumed this was going to come out hot like fire. It was assumed that we were not actually going to come down to this level. So this level here is a buy zone. but we didn't think it was going to fall down and then go up. But if it did, we would buy it, right? Or I should say bulls would buy it. We would have had a situation like this. That's less likely. It can happen, but it's less likely. What we assumed was because we were here already, if you hadn't bought this, you're not likely to get a chance. Oh, I'm sorry. Hang on. Okay. Right, so let me redo this. What I was talking about was this line. I drew this on Friday because the 21 EMA was here. So one of the things you can do when you open out a position is buy the future 4-hour 21. So actually, I got to do it this way. Okay, sort of an estimate. But then I'm zooming in here a little bit and going to this here. The next plan, in a normal sort of perfect market, you're going to get something like this, right? But we didn't get something like that. We were instead in a situation more like a double top. So there's only two things that could really happen here. It opens out of position, which means it's very, very bullish, and that was more likely. Or it double tops, it drops into the support, and then for some reason breaks and rallies, right? Even though that is also very possible, and this would still be a very bullish buy, it didn't seem like that was likely to happen. Okay? So instead, you look at the moving averages, and you do things like look at this old resistance. It's likely to become support in the future. Where's the 21? All this kind of stuff, right? Where's the other pivot? And so now, in hindsight, what worked? And as you can see, it gapped open. Here's the top of the gap. Okay? By all intents and purposes, filled the gap off of the roll reversal. Price action, guys. This is just price action. Okay? And now off it goes. Not the easiest one in the world, but that's what happened. But predictable for sure. Maybe not easy, but tradable. Okay? So that's what's going on. That's what we talked about Friday. We're going to start allowing people to join the swing trading group. I'm probably going to send out an email today, if not tomorrow. Okay, so look for that if you're going to join in the January group. There's also a performance coaching being added and some day trading assistance as well. So if you're interested in that, maybe email me and maybe I'll put you on the secret cool kids list. But nobody can join until they have finished the swing trading course. La la la. That's all I'm going to say about that. Aussie, we did this one. CAD, we did this. Yeah, pound is just terrible, huh? It's terrible. Well, then don't trade the 5-minute chart then, Joe. Right on, appreciate it. I didn't see the notification. Little engine, I didn't see the pop-up when you subscribed. Well, it's just to keep me in tune to the fact that, I know you're ready, John, right? So, okay, yeah, I'm not saying you didn't. Usually it pops up here, so maybe something's not working. Yeah, Kiwi is a fantastic currency to trade. It looks like, did I kill it? Killed it, huh? Did it, did it, did it, did it, did it, did it. Did it, love the Kiwi, always have. You guys did all that today? Right on. Yeah, I think we're going to finish out the month pretty good. Wednesday, I believe, is going to be a holiday. Out of respect for President Bush Sr., who passed away. So banks and markets are closed. If banks and markets are closed, I don't do the webinar because it's going to make technical analysis less reliable. Therefore, it's just a level of risk that I've never assumed. Okay. So, Joe, take the day off. Yeah. So anyways, I think we'll just leave it there for today. We'll see how the day shapes up, and maybe, I would assume a pullback and then a rally in the next 24 hours. They're going to kick the shutdown. See, if they add 2 weeks, then they're going to risk having to work during Christmas. So they're going to add a 1 week extension and then get it, and then they'll cut a deal. Okay. So anyways, I look forward to seeing you guys tomorrow. Look for a nice pullback today and then maybe a rally up later today or tomorrow. Hopefully. I think so. That's what I would assume. Remember, we're more likely to blow through weekly pivots this week since last week was quiet because of the G20 meeting. So now we'll get a rally, which means we'll blow through those pivots. So pay extra attention to monthly pivots and less attention to weekly pivots this week, because these are fundamental moves. One thing that a lot of people will do, and of course do incorrectly, is that they'll get a fundamental change in the market, and then they will continue to make their decisions technically. And it's just wrong. Okay? So you could even maybe delete weekly pivots this week and use monthly. I mean, I wouldn't delete them. I would just make decisions and rely more on monthly than weekly. That's all I'm saying. Could you post? It is posted, right? Ren, you mean in the swing trading group, right? It's posted. Yeah, so peace on earth. May the pips be with you. May our profits be above average. And I will... Oh, hey, Marty. Welcome to the family. So peace on earth. May the pips be with you. May our profits be above average. And I will see you tomorrow morning, 7:30 a.m. New York time. Trade safe, huh? Right on, Gary. Glad you're learning a lot. Hey, please be sure to leave a like, okay? Cheers.